Hi, this is Tony Turner, and welcome to the Market Now as of Friday noon, August the 8th. The Market Now is your mini trading lesson that applies to today's markets. U.S. stocks rose today as optimism over the Russia-Ukraine crisis offset concerns about the implications of U.S. airstrikes on Iraq. So far today, utilities are the best performing sector on the S&P 500 as their high dividend yield once more became attractive to investors after the U.S. 10-year Treasury note yield fell to a 14-month low. Now let's look at three charts that could give us some insight into the week to come. First of all, we'll look at a daily chart of the S&P 500 SPDR, the SPY. As you all know, this is the ETF that closely tracks our benchmark S&P 500 index. The SPY came up to, on July 24th, a new all-time high at $199.06, very close to the 200 mark, and of course very close to the 2,000 mark for the S&P 500 benchmark itself. But the index never made it to that whole large round number that the market has been looking to touch for some time. Instead, the SPY fell over and has fallen down about 3% since that high. And as we can see, it's done so, if you look down at the volume spikes, on high volume. We've had quite a pullback here on geopolitical concerns. The SPY has pulled back underneath its 20-day moving average, the red line, the 50-day moving average, the green line, beneath its prior uptrend line, and is sitting now on an uptrend line I drew that comes up underneath the lows from yesterday and today, at least so far anyway. And at the moment, the SPY is trading at $192. Now, the SPY has support here at 190, which would be 1900 on the S&P 500 itself. If I could draw a straight line, you would see that that comes over the consolidation that formed in May and in April. And you can see it moves over the highs right here. So that is pretty strong potential, hear me on the potential support here. And we have to see if the S&P can rally here, if we get some decent news coming into next week, if it can manage to rally here and start higher. If it does, we have to remember the definition of an uptrend, which is higher highs and higher lows. Right now we see the S&P pulling back pretty dramatically, but again, only 3%. The RSI here is oversold down around the 30 line, which could give us an oversold bounce. And we can see the MACD below the 0 line, which some people call, or some investors call, a sell signal. Although the market has not sold off really very dramatically, nor in a panic mode. So perhaps it can rally here, perhaps it can't. We don't know until next week. August and September are typically negative, uninteresting months in the market, so we'll see if the big run-up we've had in the last year and a half really can hold, or if the market needs to move down. Now, if it pulls back 10%, the SPY would bring it down to about 180. Of course, that would not happen in one fell swoop, and let's hope it doesn't happen at all. But that would be a correction, a 10% correction that quite a few analysts are looking for. So we'll see what happens over the next week or so. At any rate, I would definitely have stops here on my long positions. Our next chart is the PowerShares QQQ. This is the ETF that follows the NASDAQ 100 index, which of course is the top 100 non-financial stocks listed in the NASDAQ stock market. Today the QQQ is trading at $94.48, doing a little better than the SPY and the Dow, sitting atop its 50-day moving average, just under its 20-day moving average. Does have support here at 94. Again, if I drew a straight line, you would see that it's coming, resting atop the consolidation that was formed in June. Again, more potential support here for the Qs if it can hold here above its 50-day moving average. The 200-day moving average is coming up from below. We can see here that the RSI has not gone into the oversold area yet. It's still just below 50. MACD is still above the zero line for the Qs. So we'll have to see here in the next couple of weeks if big components of the NASDAQ 100, like Apple, like Microsoft, like Intel, Google and Facebook, if they can hold up here and even revert and turn back higher, or if the market has to give up a little more ground here and come back down closer to the 200-day moving average. Our final chart for the day is a chart of the Select Sector SPDR Utilities ETF, the XLU. I mentioned it at the beginning of this session, so I thought I'd bring it up. It has undergone a 10% correction. In fact, we can see kind of a mini head and shoulders pattern here that took place on the XLU. We can see that it fell dramatically, as most traders thought that bond yields would be rising, but they did not. So it's popped up in the last couple of days. Its high back here was 44.36 on June 30th. Recently made a low a couple of days ago at $40.07. So it has given up a 10% gain here, has pulled back and made that correction. Now the XLU, with lower bond yields, it is bouncing. It's bounced back above its 200-day moving average and back above this 40 line. If in coming days it can continue higher, perhaps even pulling back a little first, we'll see if it can stay above its 200-day moving average, above $40.50, and once again move into that definition of an uptrend, which is higher lows and higher highs. It certainly needs to keep its lows above this $40 line, and then potentially can move back higher depending again on what interest rates do. So we'll keep an eye on the utilities in upcoming weeks. There may be a little gain there to be had, at least on the temporary side. We'll have to see what happens. Now we'll go on to next week's economic reports. On Monday and Tuesday, we don't have any major reports. On Wednesday, we have retail sales and crude inventories. Thursday, we have jobless claims. Friday, we have the PPI, Empire Manufacturing, and Michigan Sentiment Report. Until next week, keep green on your screen. I'm Tony Turner, and this is The Market Now.